Is Palantir really going to $5? Well, ever since that Seeking Alpha article came out last week, it's given me some time to really think about it, as well as the perceived risks with Palantir. So first, before I give my answer, I guess I might as well state the obvious. Literally no one knows what the future price of any stock will be. All the technical analysis and long-term revenue projections will never lead to the correct answer 100% of the time. But yeah, with that, I'm gonna go out on a limb here and say that despite all the red we've been seeing with Palantir lately, I believe that it is not going to $5. And in this video, I'd like to break down the article and share some of my thoughts on why I believe Palantir will not hit the $5 mark. So in the article, the author claims that Palantir is fundamentally and unjustifiably overvalued. His reasoning being that a company that has been in business for as long as Palantir has, almost 20 years at this point, should have better financials in place that look significantly better than what we saw in the last quarterly reports. The author then discusses another concern. The Palantir valuation is too high. At a PE ratio of about 20, even allowing for Palantir's annual growth rate of 30%, the author claims that paying 20 times expected sales is still a bit of a stretch and requires a lot of faith that the sales growth will actually materialize. And according to him, even if it does, Palantir's valuation appears indefensible. However, I think this reasoning is flawed because you have to understand that Palantir is a growth company. And while sure, it's nice to have PE ratios of below 20, I feel like this is a notion mainly for value-oriented investors and not growth investors. Growth investing is focused on future trajectory of where the company will be years down the line. So the fact that the author is warning about a PE ratio of 20 doesn't really make sense to me in the context of Palantir specifically, when there are plenty of investors out there who will happily buy a growth stock at PE ratios of 50 or even higher. And again, I'm not saying you should pay ridiculously high prices for a stock just because you love it, but I mean, Palantir is well below $20 right now, and to be honest, I've never been more excited to buy a stock at these levels in an incredibly long time. I highly doubt that Palantir will make it to $5 a share, as I think for some reason, even if Palantir did manage to fall below $10, as soon as it hits the single digits, there will 100% be buyers licking their chops at those levels to create a support level for it. And again, I don't really know shit about stocks or financial advice, so please take what I say with a grain of salt, as at the end of the day, these are just my opinions. But yeah, the author then goes on to say this. Palantir is not a young company that recently went public and is looking for capital to invest. Palantir has been in business since 2003 and has yet to make a profit. And this couldn't be further from the truth, as I don't know where this guy is pulling his information from. Yes, Palantir has been a company for about 20 years now, but you have to understand, while they may not be classically profitable in the sense that Palantir has to report its taxable earnings, Palantir is operationally a profitable company. They're simply just taking their profits and reinvesting them back into their business. They reeled in about $220 million last year, which also means that, of course, Palantir's revenue is increasing. And currently, they have $500 million in free cash flow over the last year as well. And while I do believe that business valuation, profits and losses, and the sales forecast are all important things, I honestly believe if you spend too much time looking constantly at these fundamentals, you're gonna get nowhere real fast. And let me explain. When it comes to companies that you like and you've researched, and more specifically growth companies, I think what a lot of people fail to put first is, do you actually like the company and the products they're producing? I know it sounds simple, but in my opinion, I think there are certain times where you have to take a step back from the numbers for a bit and just ask yourself this question. Palantir, I believe, is a rare and phenomenal company that is offering a product unlike anything on the market right now, which is something that I believe a majority of Palantir investors understand. And just for another example, if you looked at all the bear cases around how Tesla was a trash stock in 2018 and 2019, and how it traded at a PE that was too rich and it was going to fail. Well, look at where Tesla is today. People invested in Tesla because they researched the business model and saw that Elon was providing something that was truly unique in the EV space. But yeah, regardless of whether you think I'm hopelessly delusional by this point, I'd also like to point out the risks that the author on the Seeking article mentioned. He claims that Palantir is heavily diluted, insiders at Palantir are selling, and even with a 30% annual revenue growth, he claims that Palantir's stock remains wildly overpriced. And look, you have to understand that insiders sell stocks all the time in order to access their capital. This really isn't anything new. A lot of people choose to sell their stocks to get in at even lower prices. And even if we ignore all of this, larger institutions like BlackRock and ARK Invest are continuing to buy more and more shares. However, I do think it's a fair point to call out here that perhaps as of right now, the era of mega valuations based on narratives is over for the time being. And while it does seem that fundamentals in companies are gaining some strength, I still firmly believe that Palantir is a strong company and will see some massive growth over the next few years. So in conclusion, what are the takeaways from all this? Well, my conclusion is simple. Palantir is an incredibly unique company that is offering the world a product that is superior to quite literally all of their competition. They are an operationally profitable company and have no doubt taken a very unique approach in how they're choosing to allocate their investments and finances. Objectively speaking though, Palantir is still a risky company, and a controversial one at that. Make no mistake, they've actually taken a lot of heat over the last year when it comes to the morality of their business, especially in the context of immigration policies and ICE. And look, I'm just going to be blunt here. Whether you morally agree or disagree with the US immigration and customs enforcement and how the police departments choose to utilize Palantir's software, at the end of the day, these are very legitimate sectors that are focused on protecting legal US citizens. So while it does suck that it seems that there will always be an article to try and drag Palantir through the dirt and claim that they are an evil company, at the end of the day, it's up to the people who use Palantir's software and how they choose to uphold the law. Palantir simply provides the tools for government agencies to use, nothing more and nothing less. And maybe most people who invest in Palantir don't care about this, but I still feel like it's an important call out here, as I just want to be clear that I do not believe Palantir is an evil company by any means. And being the kind of business that they are, they of course will not be doing any business with China, which indeed wipes out a good chunk of potential profits that they could be making. But in the grand scheme of things, I don't really see this as being a huge concern. Palantir operates in their own lane, and as time moves forward, I believe we're going to see Palantir expand from government and commercial sectors into offering a product that the individual can use. And while this isn't a for sure thing by any means, it's still exciting to think about where Palantir will be in the next 10 years. So I think the bottom line is this. I do not see Palantir hitting $5 a share. I see this article as more or less clickbait, and if worse comes to worse, I could maybe see Palantir hitting around $10 a share, but if we see Palantir dip to the $9 price level, you can bet that we're definitely going to see some serious buying if that time comes. So yeah guys, those are my thoughts as of now, and I'll always be sure to be honest with you guys about my thoughts. So if you want to take advantage of Palantir at these low prices, I'd personally recommend slowly dollar cost averaging your way in. But yeah, that'll wrap up the video for today. Thanks as always, and I'll catch you next time.